Obviously, the most common question I get on a daily basis is, how is the real estate market? That makes sense. However, it feels it has been amplified over the past 30 days. And rightfully so. There's a lot of moving parts in our market currently. So what is the magic answer everyone's searching for? Well, it doesn't really exist because I believe the market is transitioning, maybe, and that really does depend on your micro market. Listen, it's true. As a whole, the Canadian real estate market is starting to shift down gears, and the increasing interest rates could continue that cooling effect. We've seen markets as far as Toronto and as close as the Fraser Valley see some pretty big changes in statistics from March to April. With that being said, I'm not going to spend too much time on the topic of perspective since I covered at length in previous emails and videos, but I just can't help myself. So here's a really quick public service announcement in the realm of real estate. Please keep in mind that the changes we're witnessing in the current market is in comparison to a record-setting year in the history of Canadian real estate. So what we're trying to tell you is that the 2021 year was an anomaly and not the norm. Looking at the chart of sales across Canada provided in the email below, I think it's pretty fair to make both of the following statements at the same time. Sales are on the decline, and we still have a pretty healthy real estate market. You see, our sales haven't ground to a halt. Rather, we're moving from what I would term a ballistic real estate market back down to our 10-year long-run averages. Also keep in mind that March maybe borrowed some demand from April, given the fact that there were buyers rushing to complete some sales before their interest rate holds expired. This brings me to another reason why I wouldn't go running to the panic button. We are headed towards a slower paced real estate market, which was expected, but not until the latter half of the year. You may remember from our previous videos, we had discussed an initial surge for the first half of 2022 to capture the low interest rates with a more stable, a more steady later half of 2022. This is because the Bank of Canada had signaled a hike in interest rates as far as back as summer of 2021. However, it was implied that it was going to be more gradual and maybe, for lack of better words, not as aggressive as it has been. Simply put, the second half of the year has arrived earlier than we had expected. Speaking locally, the Fraser Valley market stands out as having significant month-over-month change. We've seen an increase in inventory and active listings, while sales have moderated and are actually below their 10-year average. Looking at north of the Fraser, we are seeing a little bit of a different story. Our sales prices have stabilized. However, our sales are down both year over year and month over month. But, and this is a really important but, our sales figures are still about a 1.5% above our 10-year average for the month of April. At this point, you may be asking yourself, so why aren't we seeing significant price differences like we are in any of the other markets? Fair question. My guess is we're probably witnessing what I would call an expectation tug-of-war between the sellers and the buyers in the market. Whether realistic or not, the sellers are probably still hanging on to the belief of that what I would call ballistic real estate market that was taking place in early 2022, while the buyers, on the other hand, have updated their expectations immediately based on the new statistics, and they might actually be projecting into what may happen in the coming months. For example, let's look at Tsawwassen detached market, where the sales figures are down a whopping 64% month over month. However, the average sales price is up 10%. Vancouver East is in a similar boat with the sales figures down 60% month over month, and the prices are still holding steady. Another contributing factor for all of this could be that an increase in inventory and a reduction in sales isn't immediately reflected in prices when we are still playing catch up in inventory. Point being, it is going to take some time for us to get caught up on our overall inventory. So how long could it take for us to get back to normal, especially for adjusting for new listings coming onto the market and sales slowing down? BCREA projects that could take up to 12 months or maybe even slightly longer given our low levels of current inventory. We are still below 10,000 listings and need to be anywhere between 16 to 18,000 for markets to balance out and to slow sales growth substantially. Lastly, I will circle back to my trusted cowbell, the MOI metric. April's MOI stood at 1.9. And for those of you keeping tabs, January's MOI was 1.8, February's was 1.6, and March's MOI was 1.5. Friendly reminder for context, analysts say that anything below 4 months of inventory is a strong seller's market, and anything above a 4 month of inventory indicates a buyer's market. All of this to say, we might actually be heading towards a normal real estate market. What a crazy thought, huh? If you'd like to further chinwag regarding your specific real estate market, your residential property, or a multifamily development, go ahead and self-book yourself for a coffee with me in the link in this email. Of course, the first coffee is always on me, unless it's virtual. Then you have to get your own.